So in the previous class we started discussing sales tax. As a continuation of that, we have to understand the double entry. We did not discuss the double entry for sales tax in the previous class. So today we will try to understand the double entry. Now, when we go to understand the double entry, in the particular business, registered business, and the rate is standard rate. Let's say our sales 100,000. The sales tax hardly. Our sales, let's assume credit sales. Credit sales 100,000, sales tax 15%. And our purchases 60,000. Again, that's also credit. Sales tax. Now we will try to understand how to incorporate this into a ledger or through double entry. See, I have sales how much? 100,000 credit sales. So customer should pay me 100,000, no problem. Next week, after 2 weeks, like this. And customer should pay me on behalf of sales how much? On behalf of that sales, customer should pay me 100,000. And how much is my sales tax is 15%. How much is that then? 15,000. So the total how much? 115,000. So now I am the business. And then I have customer, and also I have supplier. I am selling goods worth 100,000, and then for that I need to collect tax from the customer how much? 15,000. So this is my. So from the customer, total how much I need to collect? Hello? What's the lecture? I need to collect 115,000. On behalf of sales 100,000, on behalf of tax 15,000. So now what is the double entry for sales?
100,000.
Yeah, double entry.
Credit.
Sales account I should
Credit sales.
credit. How much?
100.
I have to credit 100,000. This sales is a credit sales or cash sales?
Credit sales.
Credit sales. So we have to have receivable. So I should debit to
Receivable.
receivable. How much?
150.
No. On this
100.
on this 100. Now you are collecting this 15,000 from the customer. Is this money belong to you? That money not belong to you. That money belong to whom?
Tax authority.
Tax authority. So that is something that you need to pay to the department. So pay something that you need to pay means a liability. So liability is a debit balance or a credit balance?
Credit.
It's a credit balance. So that then I have to credit 15,000 in the sales tax account, and this from whom I should collect this money?
Customer.
From the customer. So I will debit 15,000 here. So now let's complete the narration. Here I will write receivable. Here I will write sales. Here I will write again receivable. And here I will write sales tax. Is that clear? So now if I balance these accounts, let's not balance because I have input here. Now how much I am buying from the supplier? The purchases how much? 60,000. So I am purchasing 60,000, and the sales tax 15% of 60,000 how much? I think 9,000.
15.
Is that 9,000 correct?
9,000. 9,000.
9,000. So this one is purchases. When I am buying goods on credit, what's the double entry?
Credit.
I am buying goods on credit. I am not now selling is done. Now I am buying. So
Debit purchase.
correct. We debit the purchases. How much?
Space.
60,000. And then credit to
Payables.
60,000. Here I will write purchases. Here I will write payables. Then on this purchase, I have sales tax how much? 9,000. This 9,000, who should pay you?
Supplier.
Supplier should pay you. Correct? So, no, I'm sorry. You should pay to supplier. It's your responsibility to pay to the supplier. So, it will become a payable for you. So, how much is that? 9,000. But this 9,000, you are making a payment or payable to supplier on behalf of
Tax.
sales tax. So, effectively, how much you should pay to the department? 6,000 you should pay to the department. this cash you will pay to the department. And this one that we will take to P&L as part of the cost of sales, purchases. And this one this is receivable. Total amount of money that you need to receive from the customer is 110,000. Right. Anyway, this is the double now P&L.
This will go to balance sheet, huh?
This will go to balance sheet. This will be in the balance sheet, and this will also be in the balance sheet, and this will be in the P&L, and this will also be in the P&L. If you prepare a P&L, your sales 100,000. You have to be careful. Your sales is how much? 100. It's not 115,000. And your cost of sales, if I assume you don't have opening or closing stock, your only cost of sales will be purchases. How much? 60,000. So GP? Is that clear? Now if you prepare the balance sheet part, under current assets, you have receivable. How much? 115,000. Under current liability, you have payable 69,000. Suppose if I don't write cash here, this will also be carried forward. Correct? And then that will be a liability. And that liability also will be shown here. What we will show sales tax payable. Is that clear? So this is all this under this heading. What is the heading? When registered and standard. Now let's try to understand when registered but zero rated. How the situation will change. This is standard rated. Now let's work out on registered, zero rated. If it's registered and zero rated, same example, sales how much? 100,000. Sales tax should be how much? 0. That means 100,000 into is that clear? And your purchases 60,000. Sales tax 9,000. So
Purchase tax.
your purchases 60
Yeah.
and the sales tax 15%, which is 9,000, and then so total amount is 69. Now let's try to figure out the entries.
For purchases also we are calling sales tax. Huh?
Yeah. See, for that supplier it's a sales no. but other name we use is VAT, value added tax. But in UK, these our books, we are using sales tax. So why they put it sales tax? To generalize. In some countries we have GST, goods and services tax. Some countries we have value added tax. So to make it a common name, we write sales tax. So sales, purchases, receivable, payable and sales tax. So my shares 100,000, receivable 100,000. Here you write narration sales, here you write narration receivable. My purchases 60,000, my payable 60. For my sales, I don't have any sales tax, so I don't need any entry. For this, we don't need any entry. Now, but for the purchases, we need to have an entry for this. So, what is that entry? I will have to collect this money from the department. So, 9,000, and then credit. I have to pay this to the supplier. So, here payable, and here this one will be purchases, and this one will be payable, and this one will be sales tax. Now what you do? You balance all. 100,000. This is P&L. 100,000. And then this one 60,000. And this will also go to P&L. $100,000. Balance very important. 69,000. Balance 69,000. And then this one, you need to collect this money from whom? The sales tax that to be collected from whom?
Taxable.
Department. Okay. So now this is the second. Your P&L.
That you can't put as a cash because you didn't receive it.
You didn't receive it. You have to receive from the department. Yesterday we talked about it. So sales how much? 100,000. Your purchases 60,000. No change in this. Your GP 40. And the balance sheet, and the current assets, gross profit, GP.
Why here not put 9,000? This is excellent.
No, it's not expense, brother. Are you talking about why we are putting here? Is that your question? Because that 9,000 is not an expense of income for you. You are paying to your supplier, and that should be collected from the department.
Okay.
So, if you can collect what you paid, so can you consider that as an expense? No. Let's say you Hadara.
Yes.
Okay? You are paying something for SPE to somewhere. Then SPE paying you. So is the expense for Hadara?
Yeah, this 9,000 will give it balance.
Receivable.
Balance.
Yeah. Because government, although there is a mechanism to recover, but not through cash. You will have another payment.
Yes, will deduct it from.
Exactly. Cannot be right. So your receivable how much? 100,000, and sales tax receivable how much? 9,000. Your current liability payable how much? 69,000. Clear? So this is the second scenario. What is the condition? Registered? Zero. Now third situation. Unregistered. Clear?
ما في هواء.
How many?
خلي موف.
Not like yesterday. Yesterday I felt like too much. But today, less. Today it's okay for me. Yesterday I felt a headache. Okay, anyway. Now talk about unregistered. See, now this is your supplier. This is your customer. Now I am talking about us, our business. Now this business is now unregistered. Doesn't matter whether supplier or customer registered, unregistered, zero rated, not a question for us. Now our situation, we are unregistered business. So then I have a purchase 60,000. Now, for the sake of best example, we assume supplier is registered standard rated. Supplier registered standard rated. Then, how much he will charge as tax? 9,000 he will charge. And then you sell how much? 100,000. Can you charge any tax? No. Please try to understand the difference between this and this here. You see, I have written like this for zero rate. But for this, I will not write anything. Okay? Now, our sales 100,000. Sales tax margin. Purchases. Now please tell me, can you recover this 9,000?
Can you recover?
This 9,000. Now you are an unregistered business person, and if you happen to pay any sales tax to someone, since you are not an unregistered business person, you cannot recover any of that sales tax. So this one cannot be recovered. In that case, this will become an expense. So what will be my total purchase cost?
60.
My purchase cost will be 60. This is the difference between this and zero rated. Zero rated, I can recover that 9,000. Unregistered, I cannot recover anything. Clear? Now,
So in here,
Yeah.
60,000 you can put as sales.
no.
I'm talking that 9,000 expense you can show under administrative
No,
expenses.
part of purchase cost.
Part of purchase cost.
Yeah. It's part of your purchase cost. So, now sales. Nobody know now. Right. Now let's balance.
So here no sales tax account.
You don't need. You don't need to have a sales tax account here. So now we prepare the I think 31,000, right?
Yes.
This is the third. So you have three different scenarios. Clear? Okay. With this, our discussion on the sales tax is over. Now we will try and do questions on the book. Okay, you stop the video and then we